Hello and welcome to today's edition of Charting the Markets with me, Sean Murison, a senior market analyst at IG South Africa. Following on from yesterday's Fed rates decision where we saw a 25 basis point increase, we do have the European Central Bank meeting early this afternoon, where we are expecting that main refinancing rates to move by 25 basis points higher to 3.75%. Obviously, all the focus will be on that ECB press conference to follow. We look for clues as to what the future of monetary policy holds within that euro area. We do also have weekly unemployment claims out of the US. That's something to watch. Still significant, or perhaps a little bit less significant relevant to that ECB data. And that is obviously a precursor towards tomorrow's very important employment and non-farm payroll data out of the US. Let's look at some charts now, and starting off with the US dollar index, the US dollar basket. We can see that that long-term trend has been down for quite some time, and we've maintained keeping a short bias to that dollar. In the short term, we have found a short-term floor, and that's sitting about 100.50. Now, in the short term, after that Fed meeting, we did see some sharp weakening of that US dollar. It does seem to be finding a little bit of support and rebounding a little bit at this point. Now, to secure a rebound and the end of this bit of pullback, we want to see this candle close above the halfway mark of this red candle here. There's obviously all these charts are daily charts. In that situation, we'd be looking to sit out a rebound, see where that rebound takes us, and then looking for short entry. If it does not fail, if we don't get that rebound, we're watching the support level here at 100.50. And if we do start closing below that, we start looking towards our next level of support at about 99.20. So we're not looking at getting long into a rebound. We're still keeping a short bias. So new short entries, we'd like to see a rebound, see where that rebound ends with a bearish price reversal, or alternatively, looking for break of support. Now, if you do have a break of support, but discretionary as to where you put a stop loss on that, maybe a 1 or 2 day high, depending on your threshold for risk. Looking at the euro dollar, and much the inverse of what we see with the US dollar basket, so euro strength, dollar weakness, longer term trend is up, and that's what it is suggesting. We do have a bit of a consolidation at this point in time. We're testing the resistance of that consolidation. I think our breakout level is 1.1092 odd, just this high before we start targeting a move to 1.1180. If we have started to correct today, and there's a bit of an indecision, a bit of a spinning top type candle pattern formation here. In the event that this resistance level does hold, we do see a pullback. We'll be looking at one of the lower levels of support for long entries still, see where that price ends. So on this situation with the euro dollar, inversely to what we saw in the dollar index, we're looking for either break of resistance for long entry. You could trail a stop on a 1 or 2 day low. Alternatively, if in the event that we do get a pullback here from these short-term highs, we'd wait to see where that price ends, so look for long entry. We're not looking at shorting tops, picking tops in the market right now. We're looking at trading with that longer-term trend, and look either for a breakout or a pullback to try to find that opportunity. Cable. I think that trend is a little bit less pronounced, but it is still in play. We do have that longer-term uptrend in play. We do have price testing resistance at this point in time. Before that resistance about 1.2587 odd. Need to close above that to start targeting 1.2635. We had quite a strong candle yesterday. Obviously, that dollar weakness. If we do get a pullback, our level there, our first level of support, we would consider looking for long entries, somewhere about that 1.2343 mark. I think tricky one here is the next level of resistance is quite close to the price, so probably not the greatest risk, reward expectation relative to risk threshold there. If we do get the upside breakout, so preferably we'd like to see a bit of a pullback to one of our lower support levels and look for long entry there. A little bit less excited about getting long into breakout if we do get that breakout forming. Nonetheless, if we do get that breakout, we target this next level on the upside at 1.2635. That's a historic level, which does seem to have some relevance there. All right, moving over to some indices now. And starting off with the NASDAQ 100, the US Tech 100 as it's labeled on our platform. NASDAQ has been one of the outperforming global indices this year, certainly the outperformer amongst US indices. Seems a renewed appetite for tech. Results have outperformed, and obviously there's been a move away from banking counters. A bit of a sector rotation. That reflects in our charts. So we are looking technically at this point in time. It's reflected in a market start to outperform. Trend is up, although in the short term, we are trading in a bit of a range-bound environment. So same principle is applying here. We have pulling back from resistance. That resistance sitting about 13,290. Our next level of support is sitting about 12,900. So we're going to see where this pullback does end. Looking for a bullish price reveal, so something like a bullish engulfing, bullish harami, piercing line, any of those candle patterns that show the price is just ticking back after moving lower. And provided that we don't retrace too far and start breaking some key levels here, we are looking at buying into the weakness when that weakness does end with a bullish price reversal. 12,900 is a nice level of support. There's a nice little short-term, long entry opportunity over there. From a range trading perspective, we do get a move lower here and a reversal. We'd be looking to target 13,290. Would be a range trade consideration. When you want to see that trend extended, you want to see this resistance broken. With this close above, for me personally, I do like to use a close as a filter. Again, looking at daily charts, which situation we're targeting 13,730. But long bias remains to the NASDAQ for now. Although if we do start pulling back, we'd be waiting to see where that's settled for long entry. US 500 or the S&P 500, short-term range-bound environment. We can argue that longer-term trend is a slight bias to the upside. We have talked about this price whipsawing through these moving averages. So that trend is less pronounced, and there is an argument to be made that maybe in a broad consolidation rather than a clear uptrend at this point in time. But certainly in the short term, what is relevant here is we are sitting in a short-term range. Now, with that short-term range, we could be finding support right now, and confirmation of support. We'd like to see the price ticking back. It's just this price, this green candle closing above the halfway mark of this preceding red candle. In that situation, we have a harami, so it's a bullish price reversal just above that 4,050 support level, in which case we'd be targeting a move back up to 4,185 and using a close below that 4,050 as a stop loss indication for that trade. So maybe a slight upward bias, but what's relevant now for traders in the short term is this range-bound environment between 4,050 and 4,185. Moving over to Europe, I'm looking at the Germany 40. Clear trend up. I don't think there should be too much doubt about that. When you have a price moving from the bottom left-hand side of your page to the top right-hand side of your page, it's pretty clear that that is an uptrend that is in place. There is a short-term range, and the price is finding support around what we had at 15,715, which was a previous level of resistance, which we were targeting for quite some time. We broke above that, and now previous resistance is acting as support. For long entry, we'd like to see a sharp rally off of this mark. We can see at the moment, obviously, we've got a lot of data out today, central bank data, that we have this indecision candle. So the market is waiting for something to happen. I mean, good technicals will reflect what's happening fundamentally in a market. So we've got this indecision right now. We've got that doji type candle, and there's not bulls or bears aren't winning in the very, very short term, but certainly that longer term trend bias remains up. So for long entry, you want to see this price close above that previous candle. It's a nice green candle, show a reversal of support, in which case we can target initially 16,013. Use that reversal low as a stop loss indication. If this level doesn't hold and it breaks, then we start looking at a lower level of support. Same principle applying, waiting for a reversal of that for long entry, not looking to short, even in the event that we do have a break of support. Anytime we start to think about changing our trend bias, our long bias, if we start taking out a major low, and consider that major low sitting at about 14,665 odd, somewhere around about here, depending on which we're using the trend line support there, but also that major low. Now, FTSE 100, it's another one where we are trying to, this argument that the bias is slightly to the upside on that in terms of the longer term trend, but there is a case to be made that this is a bit of broad range-bound environment, sideways environment, in which case we trade between the levels. Now, we are trading close towards a level right now at 7,700 mark. We're about 40 points above. And certainly today, earlier on, this candle was looking a little bit healthier and looking like we could have a reversal off of that. And for long entry, we want to see this candle closing above the halfway mark. Then we'd have a piercing line reversal pattern. So this red candle, which is not doing that right now, it's moving towards support. But if it does change during the course of the day and close above this halfway mark, we are in oversought, we consider that a reversal off support and we target a move back to about 7,800 initially, looking at a close below that 7,700 level as a stop loss indication for that. Now, failure to do that, this level of, so we don't get a bullish reversal, we break below that 7,700 level, we would start using, like I said, like to use a close below that level as confirmation, and we start targeting the next level of support at about 7,560. All right, let's look over some commodities now, and starting off with Brent crude oil. So for many weeks, maybe even months, we've been saying that the long-term trend bias for Brent crude has been down, even though we could have a bit of a range-bound environment in the short to medium term. With that, we've been keeping a short bias to trades. That has been a successful strategy, keeping that the trend. We've had a sharp move lower now. We had a break of support, ready to test that previous level of support as resistance and continuation on the way down. We do think that we are starting to look a little bit oversold now as we move towards the 69.50 level. So I think if you're not already short, then you might not want to chase this lower right now, just because we are near what we think is a fairer value for oil at this point in time. And so, and we are quite oversold. So maybe we'd see a bit of a rebound starting to form there. We need that with the price to close stronger. If we do get that rebound, then we'd wait for that rebound to end, look for a bearish reversal at one of our levels for new short entries. In that situation, we look for the reversal highs as a close above that as stop loss indications for those trades. So right now, if you are short, you've done well, maybe consider trailing that stop loss below a 1 or 2 day high. Those movements are quite big, so a 1 day high even is quite a large stop from current levels. If you're not, I think my preference there is to look for a rebound from oversold territory, wait for that rebound to end, and then look for a short entry. Gold recently touched a new higher territory, and this is another example where we've backed the trend, and we're backing it until we see some signs that that trend is reversing. Long-term trend, gold clearly up. We've had this bit of a consolidation. We're waiting for a reversal of it. We had that sharp reversal, rally through that high. We initially had a channel resistance target of 2070. We actually exceeded that. We got to 2082 odd as an upside target, and now we are starting to retrace again. Long bias remains on gold. We are starting to retrace. We've had a breakout on that upside, and a longer term target there is 2,105. Now, if you are holding on to long positions, then I think discretion where to put that stop. These long bodied candles make that a little bit more difficult because your threshold for risk needs to be quite large. So preference now for new entry is pull back to end the bullish price reversal closer to one of those levels of support for long entry. Again, not trying to pick a top on any markets, gold included, and rather just trying to align with that longer term trend at every pullback from each new high. Copper has been a disappointing. We're looking at this. I think the trend bias is still up. If you argue the price firmly above that 200-day simple moving average, which is pointing up, but certainly that momentum on the upside has been lost. And I'd argue, at least in the short to medium term, we're in a bit of a range-bound environment. Copper prices are still relatively elevated, which is good for underlying miners of that commodity. There was a lot of excitement around China reopening early on in the year or the end of last year, and that boost for commodities. Copper, obviously, a cleaner metal, and something like iron ore. Chinese economic data maybe not as good as people have think. Maybe that reopening slower than what we really wanted, or in terms of that economy getting going. And so we've seen this start to fade. Also, obviously, a reflection of the economic outlook. Copper is a key industrial metal. But in the short term, technically, we are fine. Have found support at that $8,430 per metric ton. And we do look oversold at this level, and we are seeing a bit of a bullish price reversal, a bit of a bullish engulfing. We had one over here at that support level, started moving in the right way and faded out. We're having another one here. So we'll see how this plays. We want to see that price close there, and then we start targeting the next level there at about 8,715. So we are looking for a bit of a bounce, a bit of a range trade in copper, using a close below that 8,430 It's possibly a stop loss indication for that. We do start trading below this 200-day simple moving average, which is the blue line on our chart, and we consider, this certainly this slight upside bias now on copper to have failed, and we'd confirm a bit more of a range-bound environment, price environment. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Thanks for watching, and do look out for that afternoon data, that ECB rates decision and press conference to follow.